Welcome everyone to the next show of CFO Inside TV. I'm very happy that you've decided to join us again, and I'm also very happy to have with us today Ervin Schellenberg, Managing Partner at EquityGate, and Nigel Jones, Managing Director of Alpha Advisory. Nigel, you have been in Southeast Asia for the last 23 years, so you're an outstanding expert on the region. And EquityGate is advising European and specifically German companies for their international investments and expansion. And we're going to have a talk today specifically about the opportunities, but also some of the challenges in Southeast Asia. And I'm very happy that we managed to have both of you here today. So, Erwin, let me start with the first question. Would you say that European or specifically German companies are underinvested to a certain degree in Southeast Asia, and if so, why?
Thank you. First, thanks to be here on that exciting topic. Many of our clients in Germany are today relatively underinvested in Asia compared to the opportunity that exists. We see more and more inquiries by our clients, industrial companies, pharmaceuticals companies, consumer companies who really see the opportunity. Huge population, consumer spending coming up, industrialization, all translating into opportunities to boost the top line and the bottom line of your business.
But why would you say, if all these advantages are there, why are they underinvested so far?
Well,
what has kept companies from going there?
Well, I think we were still a very export-driven nation, and compared to the UK, the US, who have started globalization and internationalization earlier, many German middle market companies have decided to keep production, R&D, and other value chain activities centralized in Europe or in Germany, and only now that they're now pan-European with the Eurozone, they're starting to emerge out into the GDP strong and then growth strong countries.
It's interesting you say that, because growth strong after the Asian tigers, everybody would agree on that. That has changed a little bit. So I would actually say at the moment, why is it so extremely attractive? Why would companies go there just now when growth figures have actually slowed down considerably and the GDP of Southeast Asia is still smaller even than for Germany alone? Nigel, what's your experience there?
My experience in Asia, I think, is perhaps not consistent with your comment. My view and what I'm seeing in Asia right now is still tremendous growth. There was a lot of debate amongst the economists as to whether the world is decoupling. Are the economic zones of Western Europe, North America and Asia still coupled together, or are they somewhat decoupled? I think today we're probably in a position where they're somewhat decoupled. So it is true that the GDP growth in Asia and Southeast Asia has slowed after the 2007-2008 financial crisis, but the latest forecasts coming out for 2013 show very attractive growth compared with the numbers that you're seeing here in Western Europe.
But how would you advise, maybe both of you, but Nigel, since you're based in Singapore, how would you advise companies from Germany that intend to invest there to go the first step? What would be the best option? Is it M&A? Is it a joint venture? Is it a greenfield? What would you advise generally?
So Asia is a complex place, and I'm reluctant to give a one-answer-fits-all solution. I think everybody needs to understand their product. They need to understand the market and how their product can be sold to the Asian market. Of course, as an M&A banker, corporate finance advisor, I'm a little bit biased. I think that in investments and M&A is a quick and efficient way to build your business in Asia, but it's not always the right answer. And so you need help and advice to look at the alternatives and to properly understand the merits and demerits of each.
What's the main pitfalls, especially in M&A? Because we know a lot of M&A deals also turn out afterwards not to have been the optimal solutions on a global scale. So what's the specific pitfalls in Southeast Asia from your experience?
Well, perhaps I could answer your question with a bit of both sides. Perhaps I could give a little bit of commentary on some of the merits, and then, as you say, pick up on some of the demerits.
There must be some merits as well.
Well, so the big challenge right now in Asia is the competition for human talent. So with the influx of many Western companies looking to grow their businesses across Asia, it is not easy to get the very best talent in Asia that you need to grow those international businesses. So in my experience, the best talent is much more interested to join an existing business where there is an existing infrastructure, there are existing corporate relationships across the region. And so by investing in an existing business, whether you invest in or acquire, you can get access to those relationships and you can get access to that talent. So that's the, if you like, the good side of the balance sheet. The challenging side of the balance sheet is that many businesses in Asia are not institutionalized. And what I mean from that is that today a very large portion of the Asia GDP is controlled by family businesses. And those are often a owner, founder, manager run business.
And if you take that over and you lose some of the leading figures at the very top, you're in trouble.
However, particularly in Germany, clients tend to have a lot of experience in that type of acquisition because, remember, the German industrial landscape is very owner-managed, and so particularly German businesses can relate to that entrepreneurial structure very well, I think. Yeah.
So from your experience, what kind of German clients come to you and ask, and what kind of investment type do they look for?
The type of company is a bigger company, let's say 200, 300 million in sales, up to the very big companies in the middle market with 3, 4, 5 billion in revenues. And they are all typically experienced or more experienced acquirers. So they have bought in Europe, they have bought in the adjacent.
But they're still underinvested
in Southeast Asia. So they will typically be able to deal under proper guidance. They will be able to deal with integration topics, acquiring companies, and with the transaction process. However, the transaction process, I think, in Asia is, as everywhere, specific. Yeah.
So maybe as a final question is around what would be the first, very briefly, the first important steps when preparing an acquisition or an investment in Southeast Asia?
I think the first step, whether it's an acquisition, an investment, or a joint venture, is to make sure you fully understood the market. So the way in which your product or service is sold in Western Europe, it may not be the same in Asia. So the value that people will pay for in Asia and the product that they want to buy, often the way in which the market is organized is different. And so you need to fully understand that. You can't transplant your way of doing business and your way of selling your product and service and assume that that's how Asia operates. Okay. So actually my practical advice to anybody, before you even start to think through whether you want to acquire, joint venture or make an investment, is just to be absolutely clear that you fully understand who your competitors are in the region, how they do business, and whether their way of doing business is something that you fully understand, and does your product and service fit into that environment? Otherwise, you're coming at the market with a huge disadvantage.
And disappointment.
So know what you're getting into before you even contemplate how to do it.
Okay, excellent. Thank you very much, Nigel. Thank you very much, Ervin. And I got, as always, 3 very short final questions, which I would like to answer in turn with just a yes or no, black or white kind of answer. My first one to you, Nigel, would actually be, will Southeast Asia benefit from the rise of China, or will it be pushed aside to a certain degree?
I have no doubt it will definitely benefit.
Okay. And what we also already mentioned, maybe also to you, what would be the one location where you would recommend companies to start?
Well, having lived and worked across Asia for 23 years and made the decision to set up my business in Singapore, I guess I'm going to be a little bit biased in my answer, and I'm going to cheat and not give you a yes or no answer. So Singapore is my answer, and the reason is because it is, as people often joke, but it's true, it's Asia light. It's an easy way to enter the Asian market. But also if you acquire or invest or joint venture into a Singapore-based company, in my view, you get a wonderful starter pack for Asia. You'll get a group of people. Culturally, you will typically get Indian, Malay, Singapore Chinese, and often more nationalities in one small company. And that's a wonderful way to get a cultural starter pack to operate across all of Asia.
That already leads to my last question, maybe to you. Yeah. You already mentioned a couple of emerging markets. Would you say in Southeast Asia risks are bigger or smaller than in other emerging markets for investors?
I think if you start out, and I've not only transacted in Asia with my partner, but also traveled Asia a lot. I think I can only relate to Invest Asia Light in Singapore. If you then have the talent and the people to expand into the region, I don't think that it's more or less risky than in any other market. But you need the local color, you need the local talent, and the local people to relate to and to help running your business.
All right. Thank you.
All business is local.
All business is local. That's true. Thank you very much. Thank you, everyone, as well, for joining us again for CFO Inside TV. I hope you had as interesting a time with us as I did with our partners here, who are not only experienced in financial advisory, but also very specifically in Southeast Asia. I learned a lot. I hope you did as well. And I'm looking forward to seeing you again next week for our next show of CFO Inside TV. Thanks and goodbye.